All right, folks, today we're going to talk about essential survival skills for bear markets. If you didn't know what we were talking about, it sounds like we're going to go hunting, right? All right, so let me talk to you about some considerations. This is important, and I want to make sure you understand. Trading short, one of the first things you need to understand about trading short, it's an adjustment in psychology. Most traders, when they start trading, they don't think about selling and then buying, selling and then buying. They buy and then sell, buy and then sell. Trading short, it's the opposite. But here's the thing. After a while of trading, after a year or two of trading short, you don't think of it that way at all. I mean, zero. It's all about movement to the upside, movement to the downside. It's like playing a video game. It's just, okay, it's now going down, now it's going up. You don't even differentiate. When I speak to my assistant, when we're ready to put on a trade, we don't even discuss or point out whether it's a long or a short. It just makes no difference at all. It's one is going up, one is going down. Are we going to take advantage of the downside or the upside? Now, how do you make yourself comfortable with that? Okay. You make yourself comfortable by paper trading. You're not going to make yourself comfortable any other way. And paper trading, remember, paper trading has its limitations because emotions are completely out of it. There's no money involved. When there's no money involved, there's no emotions involved. What do you need to be a successful trader? You need to be completely in charge of your emotions. Will paper trading do that? No. Paper trading will have no impact on your emotions, but it'll get your mind to think in terms of going short and going long as being equal. It won't prefer one over the other. And that's how you have to change that shift in your mental focus, okay? So that's number one. And why am I talking about mental focus? Because without having that mental focus, without not having any preferential treatment for longs versus short, that way you'll be able to see opportunities to the short side. Without that, you'll only see opportunities to the long side. I'm telling you, don't think you have to focus on it. Just have to understand and accept it in your mind, in your subconscious. I know it sounds like we're going to go to talk therapy, but no, seriously, start forcing yourself to paper trade to the short side. And after 2, 3, 4 months, you're not even going to differentiate. It's not going to make any difference to you at all. Now, once you get past that, then now let's talk about technique, all right? Don't ever trade short, and this works equally just inverse for long. Don't trade short till the index, the S&P 500 and the New York Stock Exchange are trading below both the 200 and the 50-day simple moving average. The simple moving average is probably the most basic indicator that's ever been created. It's available on every technical analysis software, and there's a million different moving averages. You're only concerned about the simple moving average. You want the index to trade below the 200-day and the 50-day simple moving average. No, it doesn't matter how much. As soon as they trade, 2 days minimum. I want to see the index close below the 200-day and the 50-day moving average for 2 consecutive days. I don't want to see the highs of the trading session to touch the 200-day or the 50-day moving average. I want it to be completely below the 200-day and the 50-day moving average. That's number one, the underlying asset. If I'm trading the NASDAQ, then I want the NASDAQ to be under the 200-day and the 50-day moving average. If I'm trading blue chip stocks, I want the New York Stock Exchange and the Dow Jones to be below the 200-day and the 50-day. So again, tech stock, NASDAQ, broad chip, blue chips, or broad market, New York Stock Exchange. And if you're not 100% sure, S&P 500, SPY, ticker symbol SPY, below the 200-day and the 50-day moving average. Now, if you're looking to short stocks, I wanted you to make sure that the stock you're trading, and this is above and beyond the moving averages, I want the stock to be below the 90-day low, below the 3-month low. Don't look at a stock till it's making a 3-month low. I want to see weakness. Then you can wait for a pullback. Then you can wait for more breakdown. But don't look at a stock for shorting till it's at a 3-month low. So we want the index to be below the 200-day and the 50-day moving average, the simple moving average. And we want the stock, the actual stock you're looking to trade, to be below the 3-month low. Now, in addition to this, let's say you forget about it. You're in an IRA account. You're sitting here and you're thinking, Roger, this is Twilight Zone. I'm not going to do any of this. I can't do it. I'm forced to trade long, either because my psychology just doesn't, my head is too thick for this, I'm too old, or I'm just too rigid for this, or my trading account doesn't allow me to do it, or my wife doesn't let me. All right, there can be many reasons why. Don't worry about it. I got you covered. There are inverse assets you could trade. What's an inverse asset? It's an asset that trades up when the stock market goes down. So SDS, ticker symbol SDS. When the stock market goes down, SDS goes up. It's the inverse S&P 500. It's a mirror image, but it works backwards. One goes up, the other one goes down. One goes down, the other one goes up. Ticker symbol SDS. That's the inverse version of SPY. The second one is long bond, the 30-year long bond. When the stock market goes down, investors put their money in fixed income. They put their money in bonds. Ticker symbol TLT. And another and last asset is gold, GLD, ticker symbol GLD. Investors love safety. They love gold when stock market goes down. And again, what do I mean by down? Below the 200-day and the 50-day moving average. Don't look at any of this if the market's trading above the 200-day and the 50-day moving average. That means the market is bullish. We're only looking at inverse assets when the market is below the 200-day moving average and below the 50-day moving average. And we're looking at stocks when they're at a 3-month low or lower. We want weakness. You don't want to pick market tops. Don't stand in front of a freight train. Don't do that. That's a beginner's mistake. And if you can't trade short, but the market's bearish, SDS, ticker symbol SDS, inverse S&P 500, ticker symbol TLT, the long bond, ticker symbol GLD, the gold contract. They all will help you because they will rise when stocks fall. Folks, if you like this video, like our channel, reach out to me at roger@wealthpress.com and give me some feedback. Talk soon.